Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com.
Welcome back, everyone, to Real Estate 360 Live. I'm your host, Brian Sloper, joined today by my guest, Louis Cammarosano, the general manager of HomeGain. Reminder, the show is designed and dedicated to building the Washington, D.C. Metro's housing and credit markets by giving you good free advice. If you ever have any questions or concerns, whether it's in regards to a mortgage, whether it's, you're struggling to get a loan modification done and just not, you don't really know whether you're being told the truth or not. You're just getting the runaround. That is the story of many, is that you try for 6 months to 9 months to get this modification done. At the end of the day, they just say, I'm sorry, I can't help you. And you want to know, what are the next steps? What are the next options or alternatives that you have? We can guide you in the right direction. The number is 877-245-2030. That's 877-245-2030, or you can visit us on the website at realestate360live.com. That's realestate360live.com. So as I was mentioning before, Louis, that FHA has basically had a lot of losses, obviously, on loans that they had originated between 2005 and 2008, and they're continuously now feeling the effects from those mortgages because they have, billions and billions of dollars in losses. I can see that this is going to be an ongoing problem, for the foreseeable future, not just for FHA, but also for Freddie Mac and Fannie Mae. Freddie Mac, they hold basically 11% of all delinquent mortgages at this point in time. Now, right now there's a total of 4 million delinquent mortgages in the industry, and this is according to Housing Wire. Freddie Mac holds 11% of those 4 million. Fannie Mae has 17% of the overall delinquent mortgages, and they own, as I said before, 34% of all mortgages. So that's 17. That's 28% between the two, Fannie Mae and Freddie Mac, of overall delinquent mortgages. So basically a quarter of all delinquent mortgages are actually handled by Fannie Mae and Freddie Mac or the government at this point. And the rest of them are outside, private industry. So as you can see, it's interesting because a lot of these delinquent mortgages are able to be helped under the HARP 2.0 program if their situation isn't too dire and they're basically headed at short sale or foreclosure. Because once it gets to a certain point, people they run away from the situation. Many people ask me, okay, so what am I supposed to do? I've tried to get a loan modification. I've been working for over a year to get this done. The bank keeps telling me to supply more and more information, more and more documentation, so that they can approve me, and I give it all to them, and they just keep coming back and saying we need more and more stuff. It ultimately looks like it's not going to go through. Is this going to be the case? And I can't tell you for sure that that's what's going to happen, but I'm willing to bet that typically when you get strung along for that long, it doesn't end well. Most of the time, you're going to be stuck looking for an alternative. Now, as of right now, the alternatives that you have, if you have a distressed situation, you're bringing in less money than you're actually spending out every month. You've lost your job, or you took a cut in pay. You had, something happen in your family. Maybe you had another child, which is going to cost you more money. These are many hardships that a lot of people have. It might qualify you for doing a short sale. And, with that short sale, it's pretty much a win-win situation for you and the bank, because the bank's not going to have to go through all the foreclosure process and pay, attorney fees and everything else, and you don't have to have your credit tarnished by a foreclosure on your credit report. So, at some point, you have to move on with your life. You can't hope that the bank's just going to help you out of the kindness of your heart. As much as I'd like to think that would be the case, it's just not. It's not in their best interest to do that, because everything that they do is a financial decision. And if it's not a good financial decision for the bank, then they're not going to do it. most of the time we've seen lately that short sales have obviously picked up a tremendous amount, and that the banks are seeing that, oh, well, this is actually helping our bottom line to let people short sale and instead of letting them go to foreclosure. But there's some are still other banks that aren't.
Ryan, can I just interject? One of the
Sure.
things we need to make sure that our listeners understand is if you do a short sale, you're right, it's generally a good deal, except if you're in a recourse state, which means that you still have to pay.
Right. Yep. And, a lot of people are worried also, basically we've got the legislation that I think runs through the end of this year for the mortgage debt forgiveness. Many people are worried that that's going to go away. Now, it
Can
could.
you explain to the listeners what that means?
Basically,
if it goes away.
Okay, so if you have a deficiency, and this is on your primary residence, and there's a bunch of other rules, if you guys would like me to give you the full guidelines, just if you just go to my website and ask a question, put in your information there, I'll send them to you. But essentially, if it's on your primary residence and you basically have been living there and you have a deficiency, let's say a negative $50,000 that you were upside down that the bank has to end up eating, they can basically still 1099 you for that money, but at the end of the day,
you made $50,000, which is ridiculous.
They say that you've made $50,000. They'll tax you on it, but through the Mortgage Debt Forgiveness Act, you're not going to have to actually to pay anything. Now, that's not going to be necessarily extended. So many people were saying, well, do I need to go ahead and get my short sale in before the end of this year? And short sales take 30, 60, 90, 120 days, 6 months to a year sometimes. So I don't think by just making the decision today, all of a sudden you're going to be able to have your short sale go through by the end of the year. Chances are that they're probably going to extend this. I can't see a way that they don't with all the other government programs that they have in place and continue to put in place. I would say that this is probably going to be something that gets extended. Would you agree, Lewis? I almost feel like that there's so many distressed situations out there that they're probably going to have to do this.
I'm not quite familiar with the fiscal cliff ins and outs, but I know there's certain automatic cuts that come into place. I don't know if that's one of them, but what I would say is that whenever politicians have the ability to save a program that costs money, they do it, except in this case, it's one where they can actually gain tax revenues. So I'd be a little careful in thinking that maybe this would be around, because if they can say, look, you owe $50,000, you've just had a gain of $50,000, we want that tax,
right?
There might be some sympathy for that type of thing to expire.
Yeah, I can see where you're coming from on that, Lewis, but on the flip side of it, too, it's just going to be then instead of, people doing short sales, they're just going to go back to just letting their house be taken back by the bank altogether. It still has, the end result is that the bank can still come after them, for the loss there.
Unfortunately, though, I think that something like this won't get the full airing or an analysis. It'll be part and parcel of a grander package. And, that's where it's in danger, because it could just be part of something else, and it just happens to go away. Just like there were things tucked into the Obamacare package that people are unaware of, they get run through.
Yeah, and there's been a lot of lobbying on behalf of, obviously, NAR. Actually, I think I got an email this morning which basically said, let's see here, over a quarter of all transactions still involve distressed properties. That is why you must take action now and tell Congress to extend mortgage forgiveness tax relief. So I just got this message today. Basically, they're trying to redirect you, and there's a video from the NAR president, Mo, about the importance of extending the mortgage forgiveness tax relief. So they're going to be pushing hard for this. National Association of Realtors is to get this extended. So I'm going to be curious to see how this plays out. But I will definitely follow this for you guys and let you know as soon as we get more in-depth information. They're trying to get this pushed through Congress. It looks like as soon as possible before the end of the year, so it doesn't automatically they have to figure out what to do with it come beginning of next year. So if you have any questions or you're just unsure about things, give me your name and email on the website at realestate360live.com, and I'll definitely, keep you in the loop as we hear more. Many of you obviously want to know what's on deck this week that could potentially sway interest rates one way or the other. And like I said, most of this week is going to be, dedicated and covered by the election that happens tomorrow. So most polls are indicating that the election is too close to call. I would imagine that the U.S. and other global markets are going to probably trade pretty quietly through today and tomorrow. Wednesday, depending upon how the results come out, it'll be interesting to see how the markets take it. If Romney were to win, I could on one hand see the stock market rallying up, maybe mortgage interest rates getting a little worse. Now, when I say worse, I mean it could be an eighth or a quarter of a point. I mean it just depends. But I would venture to say no matter what happens, interest rates are they're phenomenally low right now, and if you're able to take advantage of them, I urge you to do so. If you have the capacity to do that, because I honestly wish I could, buy 50 properties at 3.5%, just because, that is what would make, buying real estate as an investment work, is when you're able to, really control your cost and fix it in at these extraordinary low levels. Many people obviously now are trying to, especially cash investors, are buying up as much real estate as possible, and they see that there's the potential for rising rents. They're able to, have a nice rate of return by buying these properties. I've had probably, 10, 15 different calls lately from people that are interested in buying real estate as an investment, a long-term investment, because they're able to capitalize from the low interest rates. Now, would it make sense, the same investments at 6% interest rates? Maybe not. And that's why I kind of say, it's important for people out there to really look. It's different when I'm saying invest in real estate to, buy and hold and rent it out and have a nice rate of return, 13 or 14% for some people, some a little bit lower than that, depending upon, how cheaply they can buy these properties. But I'm not talking about, necessarily going out there and buying and flipping houses. I'm more talking about buying real estate to put into your portfolio. We're coming up on a break, guys. We'll be right back with some questions from listeners. Stay right there.